everyone, it's Trenice from TKO Taxes and welcome to day 10 of Taxmas. This video today is for all you entrepreneurs out there that works for themselves. I was asked to do a video about self-employment taxes. So without further ado, let's get into it. Now, when you work independently, such as a hairstylist or maybe even a plumber or electrician, you are responsible for reporting that income on your tax return, even though you're not receiving a traditional paycheck from an employer. In addition to reporting that income, you are also responsible for something called self-employment taxes. So, what are self-employment taxes? To put it in simplest terms, self-employment tax is 15.3% of either your business or side hustle's net profit amount. Now, when you work for a company, the employer pays half of the tax, which is 7.65%, and you pay the other half out of your paycheck through payroll taxes. But when it comes to the side business or self-employment, you are both the employee and the employer. So if we break down the word self-employment, self, meaning you, the employee, pays 7.65% of that tax, and then employment, also you, since you are acting as both the employer and the employee, pays the other 7.65% to equal your total of 15.3%. So there are two types of tax that make up the 15.3% self-employment tax, and that is the Social Security tax, which is 12.4% of that, and the Medicare tax, which is 2.9% of that. Now, although the two of these taxes work together to make up the 15.3%, each of them work a little bit differently, and we're going to take a look at that right now. Now, the simpler one of the two is the Medicare tax, which is the 2.9%, and that one just applies to all of your self-employment income. But when it comes to the Social Security portion, which is 12.4% of the self-employment tax, it works a little bit differently. The government tries to give you a break by looking at your total income and not just your self-employment income. But before applying that 12.4%, any income that isn't from self-employment, such as wages from a job, is subtracted from that amount. And then only the amount of your self-employment income that makes up the difference is taxed at the 12.4%. So let's take a look at this with an example. Let's say that you had a job during the year and you made $150,000. And then your side business brought in $50,000. That's going to give you a total income of $200,000. Now, Social Security takes a look at all of your income, and then it subtracts any income that isn't from your side business. So it would subtract the $150,000 from the $600,000, and then you're going to get a total of $18,600. And that is the amount that is going to be taxed at the 12.4%. Which brings you to a total of Social Security tax amount, $2,306.40. So basically, instead of Social Security taxing your entire side business income, it's going to subtract any income that you earned outside of your side business and then only tax you on the remaining amount. Now, if you only had the $50,000 from the self-employment income, then that full amount would be subjected to the 12.4% because the first $168,600 of your income is taxed at that amount. Before we wrap up, there are a few more key things that you need to keep in mind when it comes to the self-employment taxes. So here they are. You're going to be responsible for an additional 0.9% of Medicare tax if your total income exceeds the amount for your filing status below. So if you're married, filing joint, then if you have more than $250,000 in total income, that includes the income of your spouse, then you will be responsible for the 0.9 additional Medicare tax. If you're married filing separate and you have a total income of over the $125,000, then you would be responsible for the 0.9% additional Medicare tax, and so on and so forth, depending on your filing status. Now, there is a such thing as a self-employment tax deduction, which is the equivalent of what the employer portion of the self-employment taxes would be, but that would apply directly to your income taxes. It's not going to affect your net earning from self-employment, nor is it going to affect your self-employment taxes themselves. There's also a health insurance self-employment tax deduction, and again, that has its own sets of rules, and that basically wraps up the self-employment taxes. Generally speaking, if you make more than $400 from a side business within a year, you are required to file the self-employment taxes. Now, if you are a church employee and you make more than $108.28 in the year, then the same thing applies for you. Now, there is a such thing as another tax called the quarterly estimated tax payments, and if you want to know more about that, just let me know and we'll get into that in another video. But for now, of course, I'll leave a link below in the very first comment of this video, along with a link about more information for self-employment taxes. And that's all I have for you today regarding the self-employment taxes. For more information, you can always check out irs.gov. Again, my name is Trenice from TKO Taxes. Check out TKOTaxes.org, and I'll see you in the next video for tip number 11 as we continue TKO Taxes 12 Days of Taxmas.